Well, thanks, James. So you guys are buyers agents, and also you have a background as a valuer as well. So obviously, you got your finger on the pulse with the market and what's going on in Brisbane and southeast Queensland. So what are you guys seeing at the moment out there?
Yeah, so Lewis, since I guess what are we now? We're around mid-May. So since COVID sort of hit a couple of months ago, we just sort of saw the transaction levels dropping down dramatically. So we track a lot of statistics internally. So predominantly the inner city Brisbane housing market, we saw a decline of around 50% of the sales. So I think out of those 65 inner city housing suburbs, transactions went from sort of mid 400s in a month down to around 220 in April. And in May, it's been very similar. So we'd expect when the stats come out towards the end of May, it'll be still sitting around that 50% mark. But the level of demand and supply is pretty even. So even though transaction volumes are down, the amount of buyers that are still out there compared to the amount of people willing to sell still seems to be fairly well equal.
Sure. And so what impacts that had on prices so far from what you guys have been seeing?
Yeah, well, it's probably the first. I mean, I've been doing buyers agency since 2007, and I've been a valuer since 2001, so it's nearly 20 years. And I've never seen us go from a hot market to a complete opposite market like we were in March. So Brisbane's momentum was building really strongly from around October last year. So we saw it suddenly hit that. Obviously, when we went into lockdown, the market just basically came to a halt within that day. So we haven't really seen the housing space go backwards in value yet. All we've really noticed is that the premium that people were paying, which was probably 3 or 4% with the fear of missing out and really just wanting to get in, that's now gone. So effectively, you could probably say it's pulled back 3 or 4%, and it's just sort of started to stabilise fairly well from about mid-April on.
Sure. Yeah, we have a lot of clients asking us just which way things are going, and everybody's a bit confused because when they talk to real estate agents, their job's to talk up the market, and then when they're watching the news, their job's just to try and sell fear and talk down the market. So everybody's a bit unsure as to what's happening. What do you make of all the news reports? And some people are saying 20, 30, 50% drops in the market. How do you think that's going to affect us in Brisbane and southeast Queensland?
Yeah, mate. Well, to be honest, I think obviously our business is a buyers advocacy business, so we're representing buyers trying to get into the market from an investment or a home buying perspective. But I'm very mindful that you've got to be realistic with everything. So when we start talking drops of 20 or 30%, it's pretty extreme, and it's very broad, saying Brisbane is going to go down 30%. So really what we have to look at is the macro fundamentals of each of the individual markets we're buying in. And saying, okay, are we buying in Camp Hill at $3 million at the absolute peak of the market? Well, naturally, that's probably going to be a little bit more vulnerable. Whereas the market where there's still plenty of demand and people are trying to get in, and there's competition with first home buyers and upgraders, anywhere from sort of that 800 to about 1.5, that market's holding pretty steady. And I think it still will hold reasonably steady. We've read some statistics from ANZ around who's been affected by job losses and things like that. Confirming that a lot of the inner city jobs are a lot safer than when you're getting further out of town into what people are used to refer to as mortgage belt territory probably 10, 15 years ago. Those areas are probably going to be a lot more vulnerable when we get towards sort of August, September, mortgage repayments stop, JobKeeper stops, all those sorts of things happen. But I think really when we look at Brisbane's affordability in particular, we track what we call our affordability index, which is percentage of household income used to service your debt. And Brisbane's sitting at around 26, 27%, which is the lowest it's been since just before the 2003, 2004 boom. So that, I think, coupled with low vacancy rates, coupled with quite a in-demand inner city area from a convenience, school catchment zones, public transport, shopping, employment hubs, etc. When we put all of that together, we expect we'd probably see a decline, maybe another 1, 2, 3%. But really, we can't really see it going a lot further than that, unless we would get, probably the only disclaimer we'd really want to put around that would be is if we get a resurgence with sort of a second surge of COVID and things go into lockdown again. I think every statistic will be thrown out the window if that happens.
Sure. So the real stronghold here then would be trying to get as close to Brisbane CBD as possible, which is has always been the sort of general advice we give people to try and get in that 5 to 10Ks. We're getting a few first home buyers who are seeing this as a good opportunity to get into the market, but they're probably priced out a little bit of that inside close to Brisbane area. So maybe looking at a bit further at that 550 to 750 price range. What sort of advice would you be giving to these guys?
Yeah, look, I think in that price range you can be reasonably aggressive in your negotiations at the moment. Obviously, there's a few more home buyers definitely jumping in at the moment. It sort of seems to be that time where they see it as an opportunity, which I probably tend to agree with. When you're in a market where there's not as many buyers compared to what it was back in March when it was running pretty hot, you have better ability to negotiate. So what we tend to see though with our real estate cycles is when confidence creeps back in, people get back into the market quite quickly. So what we would expect to see is if people are trying to get into the market, I'd be saying try to get in between here and sort of August-ish. While there's limited competition, you can negotiate a little bit harder. When confidence comes back and people decide to jump back in, we're going to have a lag of supply. So when someone wants to sell their home, the agent will normally go through and say, okay, we need you to declutter, we need you to fix this, fix that, do this, get some new turf, bark chip the lawns. It all takes a few weeks, a month or so before they're ready to sell. So that lag time might actually result in seeing more demand for less supply, which is then going to really remove any of your ability to negotiate pretty hard. So I would be saying to first home buyers, if you're trying to get in, I'd be aiming sort of anywhere between here and August.
Sure. So get things prepared and don't sit on the fence too long trying to pick the bottom then.
Definitely. Yeah, absolutely. Because if you're trying to pick the bottom, it's really tough. You're trying to pick it with everyone else. And if you miss it, then you're back into that semi-competitive marketplace where you might have 2 or 3 offers. Right now, you might be the only one prepared to make an offer. And contract terms and conditions are making a huge difference to sellers at the moment. So if you can get your building and pest down to 3 or 4 business days as opposed to a week or 2 weeks, which you can comfortably do, the building and pest guys have a bit more time at the moment due to that reduction in sales, then that will improve the appeal of your offer over someone else's offer as well. And obviously things like finance, if you've got a pre-approval in place and you might be able to do it subject to evaluation rather than subject to a full finance approval, again, it's going to put you in a really commanding position.
Definitely. All right. So anywhere around Brisbane that you'd be putting a hot tip on as a growth suburb?
We've never really done the hot spotting side of things. I think the big thing for people to consider, even if it's their first home, if they're planning on being in that for, say, 10 years, then maybe you're thinking about maybe we're going to have kids in that time. Are we going to need school catchment zones, that sort of thing? So I definitely say, look bigger picture rather than instantly what suits you. From a first home buyer perspective, we'd also say, look, don't look for something niche that is just appealing to your personal taste. Try and pick something that is appealing to the broader sense of the market. Because if you go to sell the property, really you need to buy with whoever the end person is in mind. So if you're planning on upgrading in 5 years' time and selling it, then you need to be mindful of who's going to be my market in 5 years. If you're going to upgrade from that into your next home and keep that one as an investment property, is it the sort of property that appeals to a lot of people? So as far as where to jump in, if you're 5 to 700, 750,000, look, I think just sort of do your research as to where you really want to live. There's still some really good opportunities in some of the inner city suburbs like Wavell Heights and Kedron, areas like that. You can still pick up some homes within that sub 750. If you're sort of sub 650, you're obviously going just that little bit further out. But really look for your convenience factor. If you've got to work in the city or where are your major employment hubs, really that's going to be key for a lot of people.
Sure. All right. Look, good advice. So good to know that the doom and gloom is probably a bit exaggerated at the moment, which I'm sure will put a few people's minds at ease. But yeah, that's good to hear. I think that the advice that we give people as well is get pre-approved and get organised and put yourself ahead of the competition in that regard.
Absolutely. And for your first home buyers, Lewis, like if they haven't bought property before, do a bit of research as to what's involved in the contract process. Don't ask the selling agent because they're really going to try and take advantage of that. And you could end up putting yourself in a vulnerable position. So I'd definitely say do a bit of research, look at the REIQ website, things like that. Talk to people like us. We can just give you some general advice. It goes a long way to making sure you're well protected.
Sure. Look, and then our busier medical clients at the higher end of the market who maybe don't have a bit too much time on their hands to do that sort of stuff. Is that where you'd come in and help out?
Yeah, absolutely. Look, lately we've been helping a lot more first home buyers as well. We've sort of tailored our service to try and provide a more cost-effective option for first home buyers. But yeah, look, time poor medical, dental professionals, that's a large portion of our client base. Not purely around time, but just the fact that a lot of them say, look, we just don't have confidence that we understand the value and can negotiate hard. And that's really where we come into play, is taking the time off their hands. So we do all of the inspections and due diligence and filtering process, but then it's that contract negotiation and managing all of that with your building pest solicitors, finance, all the way through to settlement.
Yeah, definitely. So a lot to be done. So depends how confident you are. Definitely. Yeah, well,
absolutely.
That's awesome to give us a bit of an update, and thanks for your time. We'll maybe hit you up again in another 3 or 6 months' time to see how the market's tracking and see if your advice is still the same.
Yeah, no, sounds good. Thanks, Lewis.
Awesome. Thanks, James. Cheers.
Cheers.